Harvest ETFs is one of the major companies in Canada that provides and manages a higher income ETFs for passive income oriented investors. So today they came up with a brand new 4 ETFs, and I think these are very important because this reminds me of pretty much what they have a bunch of them in the US. For example, Yale Max, but the difference, of course, this one will have a lower yield. However, they're very good because the companies that they've chose, they're one of the top performers, right? We have LLY, we have Amazon, we have Microsoft, we have NVDA. I'm going to show you the difference between the two versions that they have, because they have one which is a US dollar and regular, and they also have enhanced. So I'm going to show you the difference between the two and why and which one you should pick, and the reason why you should even invest or consider investing in this ETF. But first thing, we can look at official video from this guy here.
Harvest High Income Shares ETFs, now launching on the TSX. We are excited to introduce Harvest High Income Shares ETFs. These are built to generate high income every month and provide exposure to long-term growth of core U.S. companies through single stock ownership. Amazon, Microsoft, NVIDIA, and Eli Lilly. These are some of the largest and most widely held companies in the U.S. Harvest High Income Shares offer access to the long-term growth of these companies while benefiting from our proven cover call writing strategy to deliver high, consistent income every month. Here are the key features of the Harvest High Income Shares ETFs. 1. Own a U.S. stock and generate high monthly income from active covered call writing. 2. These are all Canadian trust units listed on the TSX. 3. They're available in Canadian and US dollar units for income flexibility. And 4, high tax-efficient income from covered call writing. We also offer enhanced high income shares ETFs with modest leverage for even higher income and returns. Harvest High Income Shares from Harvest ETFs. Income happens here.
So pretty much the CEO has described what these ETFs are. And I thought there's a video, so it will be very helpful to hear from him directly. So now I wanted to give you a description of the difference between these two. They have, for example, they have LLYH, which is Harvest LLY High Income Shares ETF. The distribution yield will be 16 cents. If we scroll down, we look at the other ones, Harvest LLY Enhanced High Income Shares will be 18. So the difference is 2 cents. And the reason why is because this is enhanced. Enhanced meaning they are using some leverage to it. So the first one is a regular one. And then if there's an E in front of it, which is, that indicates that this is enhanced. They put about 20 to 50% on leverage, meaning they will kick you. Well, of course, when you leverage, meaning you generate more money from the money that you don't even have. So that's why they'll be able to give you a little bit higher income. But the downside to that is this is going to be more volatile as compared to regular ones, right? That's a difference between these two. Now, if we look at the management expense ratio, it's 0.4 basis point. All of them, they'll be the same. Either you own a Canadian dollar or US dollar. So all of them, they have 4 companies right now. They have Eli Lilly, they have Amazon, they have Microsoft, and they have NVIDIA, and all of them, they would have the same 4 basis point, but the yield is kind of different a little bit. If you want to know the yield, what we can do is we can do 16 cents times 12. That will give us equal to $1.92. And if we divide that by the price of today, LLY, which is market close, was $12.37. Divided by $12.37, that represent about 15%. So it's about, if you round up, is 16% times 100. That will be about 16%. That's a yield of this Eli Lilly right now. 16% is not bad for high income, just a regular one, of course. So if you buy enhanced one, 18, that will be more than like a 17% yield. Pretty good. But when it comes to NVIDIA, for example, NVIDIA has, because NVIDIA stock is very volatile, of course, even yield max, for example, they always have higher yield. Look, it's 22. How much is 22? If we look at the 22, The price is only 11.80, so 0.22 cents times 12 equal to 264. If you divide that by the price of today, which is 11.80, divided by 11.80, that's a 22% yield. So if you buy NVIDIA enhanced one, you are getting 22% yield if they keep paying the same distribution that they pay. This is the distribution that is going to be paid this month. But we don't know what's going to happen from now, in the future. They might change these yields, but for now, that's a yield you're going to get. So LLY, you're going to get about 15%. So I can say it's between 15% to 22%, when it comes to the enhanced one. What's a regular one for NVIDIA? They pay 18. That still represent massive, almost about, 18%. So that's pretty cool. So that's the difference between these two. The first one was a regular one, which there's no leverage, and the second one would utilize leverage, and all of them would have US. So LLHE and LLH.U. The U represent US dollar. So that would be for all of them. I don't have to go one by one, but that's you get the idea. And the reason, of course, why you should buy, of course, the CEO has pretty much mentioned you own US stock that has performed well, and they also have tax efficiency because these are Canadian assets if you are a Canadian resident for tax purposes. And also they have available in enhanced series, meaning they have regular one. So it's your choice. You can either buy a regular one, which has less volatility and less income. But if you want a more income and you can tolerate the volatility, then you can buy the LLH, the E version, which would have more volatility, but in return you get more yield. I'm going to just go on one example. I mean, of course, I'm not going to read all of them because they're pretty much all the same, but I'm going to just kind of go quick read on this one. So I'll show you here, for example, right? The fund focus. The first thing they describe the fund itself, which is the stock itself. Eli Lilly. We know Eli Lilly is a company that deal with pretty much it's in healthcare sector. It makes pretty much drugs. Now the fund focus itself, the Harvest Eli Lilly High Income Share provide access to to the growth potential of Eli Lilly and overlay of active cover call strategy up to 50% of the portfolio to generate high income every month. Unit of the ETF are available in Canadian dollar and US dollar. So do you see here, guys? This is very important. They only rate 50% of the portfolio. So to each 100 you invest in, 50 is going to be on exposed to cover call. So it's going to be more volatile, and then only $50 of that is going to be kept for growth of that particular ETF. The four advantage you have for this ETF, of course, they have mentioned here the US stock and high monthly income, Canadian trust. So Canadian trust meaning you pay lower. I mean, you paying your taxes different. That's what they mentioned here, tax efficient. Lower purchase price, of course, only $11 and $12 rather than buying Eli Lilly itself or NVIDIA. They are in hundreds. So instead of paying that much money, you can only pay like $11, $12. High income in Canadian and US dollars. So whatever currency you have, if you invest in Canadian one, you're gonna get Canadian dollars. If you invest in .eu, which is, for example, like this one, you're going to receive those income in US dollar. Available in enhanced series, so you can either buy regular one or enhanced one, as they mentioned before. And this is pretty much just performance of Eli Lilly. You can see Eli Lilly has performed pretty well. So if this continues, right, it will reflect, of course, your stock itself that this ETF is following. What else? Performance, of course, we don't have performance right now, but breakdown of portfolio. Call option written to be determined, and underlying equity is only one because it just write call on one stock. And by the way, this is directly, it's not it's synthetic like Yieldmax. I mean, I talk a lot about Yieldmax ETF. So Yieldmax does synthetically. These ones they use actually cover call. They own the stock and they write a call on them. So it's a pretty cool and difference. If we go to fund details here, we can see we know the ticker symbol is LLH. That will be the same in all of them. I'm not going to read all of them, but I'm just going to show you this one, and that will represent pretty much all of them with the same thing, but the yield will be different. I've already shown you the yield and distribution. But what they all have in common is the management fee. They're all going to have that 40.4 basis point. And inception dates, they all came out just yesterday, 21st of August 2024, because today is 22. Distribution frequency is going to be monthly. So these are monthly income ETF, and eligible, you can invest in RSP, TFSA, RAFE, RESP, first home savings account as well. And risk rating, they're all rated as a medium risk. If we come to Harvest LLY Enhanced Income ETF, we can see the difference between this one and the one that I just showed you is that Harvest LLY Enhanced Income Share ETF provide access to the growth potential for LLY and overlay active cover call writing strategy on up to 50% of the portfolio. It applies modest leverage at around 25% for the high income and growth potential of unit of the ETF are available in Canadian dollar and also US dollar. So all of them would have the same strategy, but the difference is that they're all going to put 50% of the portfolio, but the one would use leverage of up to 25% and the other one doesn't use any leverage. So that's the difference. But we look at the management fee will be the same, and distribution frequency will be the same because you're investing for monthly distribution. Now, if we want to look at performance, of course, they can display performance on their website, but we can see the performance on Yahoo Finance. This is just intraday, of course, because it's just been around for just less than a day. I mean, 1 day, right? So we can see here it started on the 21st of August. It was at $12. That's when it opened. Today is 37. So it has gone up. Had you invested, you would have gained some money. Now, if we look at Harvest NVDA Max, it has gone down. It started at 12 and it closed at 11.43. That reflects, of course, the stock itself of NVIDIA that went down in the market. If we look at Amazon Max, of course, it started at $12 and right now is at 11.85. I mean, it's down at 2.15%. When we look at the last but not the least, which is Microsoft, also has gone down. Max is started at $12 yesterday and today has gone down 189. Altogether is 11.80 so far, has lost about 20 cents. Right now it says 24 cents. So that's the whole, 24 cents including because the first day it went up a little bit, right? It went up at 12.06, it went all the way down up there, and then this represent 24 cents represent today from where it closes the other day. So all in all, these are performance of these ETF. I think they are great ETF. So if you want to make money and from one of the best ETF providers in Canada, then there you have one of the best 4 ETFs you can invest your money. And I believe these are really great ETFs because the stocks, underlying stocks, are great. Again, if you like this content, just make sure to subscribe. And if you also like this video and content in general, just make sure to smash that like button. And don't forget to follow so you don't miss the type of update whenever they announce the dividend and distribution or there are any changes on your investment in these ETFs. I'm going to let you know. Till we meet again next video. Bye bye.